Hello everybody, once again, third video of the day. We're doing Sunday simulations today. For July 12th, we're going to have simulations for April 3rd. We did that random.org, got April 3rd. So I'm going to be doing April 3rd for gold, and then Chan's here too. He's going to be doing April 3rd for Euro USD. So we're going to do 2 days of simulations, the same day, but for two different pairs. Kind of have like practice and trying to put our strategies into play.
Yeah.
And basically do what we've been doing the past couple of weeks on our simulations. Just give a good informational session and knowledge on how we trade and what to look for in pairs. So without further ado, let's get started. So right now I got my screen blank. We go on trading view. It's this little I button here. I think that's an I, ain't it?
Yeah, it's an I.
It's an I. So then when you do that, you go to this little date, go to April 3rd is a Friday. So yeah, that's a tough date for sure. So I'm going to actually go to April or March 28th, just for the fact you got to see the weekly candlestick right here. And I don't know why it took me all the way back to 2015. Oh no, yeah, okay, never mind. So you go to weekly first, then you click the I, and then you go to the date, and then you go to March 28th, and then you go to C. It's not working. What the hell?
What? March? Really?
That's weird. March 27th? Oh, it's because it's a Saturday, ain't it? Replay.
It's broken.
It's not broken. We're fine. There we go. Yeah, you go to replay that day. Unsee it. So yeah, you got that candlestick. Go one forward. So now you got the March 23rd candlestick. That's the last candlestick before this week coming up. So as you can see, you had a big sell-off, bullish move. What am I looking for? I think this was the coronavirus fears. Sell-off, liquidity grabs, smart money wanted to buy prices lower. Tested this lower level. And then on the last week of March, it started to buy up. So what I'm expecting is the next week kind of to start lower and then buy up. So when I go to the daily, we can kind of see the daily form. Holy shit. So this is Monday. So yeah, this was the Monday candlestick. No, this was Monday. 23rd was a Monday. Yeah. Kind of move all the way until March 30th. I gotta see one more week actually. So yeah, this is the next week. So this, oh yeah, this is a week before April 3rd, isn't it? I'm confused. Anyway, March 30th. Continue on. March 31st. April 1st, Wednesday. And then this is Thursday. So now when we look at the daily, you can see we have this big sell-off during coronavirus. That's to grab liquidity. Investors are liquidating their gold positions to add into their portfolios to help with margin calls, etc. And then you have investors and countries flock into safe havens such as gold. You have this little pullback. This was a big fake out from what I remember that day because it broke all these levels. But as you can see, gold continued up on the Wednesday and the Thursday. So overall, it's a bullish momentum. On Friday, I think it might slow down a little bit. It's still a lot of volatility, but just looking at these charts, you can see, yeah, it broke out on the Thursday, and now we're back into this range. Any break above these levels, you're going to see going up. So I am bullish bias on this day, and right now it is at the end of April 2nd and our day is April 3rd. So I'm just going to fast forward a little bit to the time I trade at 5 a.m. So one more candlestick. So now we're here. We do a quick analysis. Range formed. This range has been from basically after the bullish move throughout Asian session, throughout the start of London session. So now we have two options here. Actually, three. I'm going to give three options. First, let me draw these. support, resistance. Sells below here, maybe tap into here. So the sells, I'm only playing short-term sells. It isn't a bullish trend, and I know the economies are slowing down, etc. Investors, smart money, everyone's locking in safe havens right now. So you might get a sell off to a certain level. I think 1596 is that level because it has bounced around that level, even in March, end of March, start of April. So that level is still quite ways down.
Mm-hmm.
Yeah, I think any sells below that and then any buys above here is good. But I know how gold is. Gold's gonna have one of these types of wicks. So even if the candlestick forms a wick and starts reversing bullish, that's when I would get into buys to first test the higher end of the range and then break out further too. So it's pretty easy analysis, I say, in my opinion, on this one right now. Like the 4 o'clock was finished pretty bearish, really bearish actually. But yeah, now we break it down to 30-minute, still in the range. 15-minute, still in the range. 5-minute, still in that range too. So now when we start, it's going to be the 5 o'clock candlestick. So let's see how the 5 o'clock 5-minute does. See, look, reverse all the way up. This is why you can't chase on the short. If you think it's going to break, you need to wait for a confirmation for the break, especially on gold. You can't chase gold. So now we have the 15-minute formed right here. 15-minute, as you can see, it just tapped into here, moved up. I wouldn't place any buys right now. And just considering the volatility factor and from a lesson I learned in March, which I'll put up on a video probably this month, is when the volatility increases, your position sizing should decrease. Because let's say I did enter a buy here at 1612, my stop is going to be 50 pips. So I would have to adjust it according to 50 pips. We have spreadsheets for that now. Chan has his own spreadsheet. I have my own spreadsheet. So now it's just going to be according to the pip amount we're willing to risk. So let's put this into theory. I am bullish on this. I do feel like it's going to go up. This is a start at 30-minute candle. I would place a buy because I like to get better price entries on the next candle wick down. So I put a buy limit at 1611 right now. Just how this 15-minute closed, it respected this support. So I feel like 1611 would be my first entry, and I put like 50% of the position based off of this stop. It would be about I give it to 1606 because I know how gold moves. It kind of does tap into that. So 1606 is my stop. 1611 is my buy limit. Let me quickly put that here. 1611 buy limit. 1606 stop. And as you can see, that's a 50 pip stop loss. So I adjust the 50 pip stop loss. 50 pip SL based off of my risk. What's the word? My risk? What I'm willing to risk. Yeah, based off what I'm willing to risk. That's one lesson I learned in March because I think I went standard positions when I had my strategy back in January, February, but the volatility increased in March. And this is based off of bullish market structure, bullish momentum on higher time frames, market / COVID fears, cuts in interest rates, smart money and retail money, investing in safe havens such as gold. So I am still pretty bullish on it. That is my trade right now. And 50 pip SL based off of what I'm willing to risk based off of my spreadsheet. So let's go back to 5-minute. Let's see if it actually hits. Definitely hit. And then when we continue it, ooh, there it is. So that's a 30-minute now. 30-minute, I still think it looks good. And I would actually add if it breaks above here. And then I would add above here. My TP for this trade I think would be 50 pips up to 1616 for my core position. So that'd be a 1-for-1. Whoops, 1616. So that's a 1-for-1 right there. And then I let runner run. That's basically the trade there. And I would add, if it does break this range, I would be inclined to add. So that's not going to be right now. I'm going to let the candlesticks form a little bit, let it play out. I'm going to go one more. So the next 15-minute has formed. As you can see, next 15-minute finished above here, but it's still in this range, so I'm not inclined to add right now. I'm in profits right now. But what, it reached 1614 as its high. Another 20 pips, nothing too crazy. Kind of just let it run here, see what happens.
Boom.
Damn. So now here, I know, so trading view is kind of weird, as in it doesn't give you the price action during, but Chad knows how I trade, and I usually do punch in if it breaks levels.
Yeah.
So I think at this point, my 1616 would be get hit. So this is my trade 1. Trade 2, I would be planning around the same thing. Like I said, if it broke that upper range, wait, let me just put hit and then hit adjusted runner SL to break even. Another lesson I learned. But as you can see here on the 5-minute, it broke up. I need to go one more candlestick, unfortunately. There we go. But look, bullish momentum, break above the range, 30-minute, same thing, break above 1 hour. Oh, that was a 4-hour, whoops. So 1 hour, again, break above here. So as you can see, bullish momentum easily could continue, and I feel like it'll test the top of this range, 1630s. I remember there was a level, yeah, this level back here, 1633. Around that over there, 1630s, I feel like it could test there. So right now, what I'm looking for, let's say I didn't punch in, I'm gonna be more honest with myself. I see what happened, etc. 15-minute, 30-minute, everything's bullish. So if I were to enter a trade right now, my trade number 2, I would put a limit. I think at, what did it close at? Close at 19. What was the high? High was about 21. My limit, I think I would put it at 18. So 1618 would be my limit. My stop loss would actually be my adjusted runner SL 1611 before it had the breakout. Or based off 30-minute too. Nah, 30-minute. 30 minutes actually 1611 surprisingly. So
Oh.
15-minute 1612. You know what? I'll put it at like 1612.50 below the 15-minute. If it breaks below the 15-minute, then it's a failed trade.
It's back to the range.
Yeah, it's back in the range after. So this next one, trade 2, I would put still bullish market structure, broke out of the range. Yo, I need to check news. I forgot to check news. It's always important to check news. To everyone viewing, you need to check what events are happening that day. So if I go to Friday, April 3rd, you have NFP that day. NFP and unemployment rate. And just considering what happened with coronavirus, April 3rd is going to take what happened in March into consideration. So it would be bad news in theory. It's the beginning of the end. So broke out of range. News at 6:30. Oh, what? News at 6:30 a.m. COVID data factoring into economies. Expecting bad data for the price of gold to continue its momentum upwards. All right. Trade. Buy limit 1618. SL 1612.50. TP, considering volatility, that's about 5.5. I'm gonna put 1624. Runner run based off structure. There we go. That's my next trade. 5 minute. Continue. It hit. Definitely hit.
You're still in it.
I am still in it. 1612. So right now I'm in this trade right here.
So wait, are you still in trade 1 and 2?
Well, trade 1, I got my TP for my core. And then I have my SL to break even at 1611. And this one I have 1612.50, which it hasn't hit yet. So I think we gotta let it run based off that. 15-minute kind of close back in the range, but this could easily be the hour wick forming for the news.
Yeah.
So, oh, did it hit? It did not
No.
hit. Look how
Nice.
close that is. This next candlestick, I think it hits. Oh, wow. One more. There we go. So we go to 30. This is pre-news. 30-minute, 15-minute. 15-minute kind of created a support here. There's a reason why I put it at 50 is because I know how gold moves now. And it has that crazy wick down before going up. 1612, I think, would have been safer. This one would have caused some stress. So I'd be like, been like over, but yeah, no, now you can see it kind of finished at this range. So this is the breakout, the retest. And with news coming up, in theory, it should go higher. And now that I'm in hindsight, trade number 2, since it's based off news, this should be reduced risk on trade number 2. So I'm going to put a quick note here to learn off of it. Put a star, reduce risk due to news. I didn't say that for the stream, but that's just going to be a quick note. Considering there's news at 6:30, that should be reduced risk if I was playing that news factor. So it should be like, if I was going a half position based on volatility, it should literally be 25% of a position at this point. But we can see, oh wow, look at that volatility.
Damn.
So my SL got hit. I would give this trade another chance though. I'm doing this exact, so when this 5-minute closes, I'm gonna put 16, 17, 50 based off bid and ask. So I'd have the same exact trade, but this time my buy, because the news was bad, the data was bad. I remember when I was looking at the data, NFP and unemployment, it was bad. So I'm putting the same exact trade.
Yeah.
There was a couple days, couple simulations that we had over the past few weeks where we said play after the news. So you kind of look, before I write this down, you look at the volatility, you kind of see the wick up and down, but you take the data into consideration. Bad news, wick up and down, 5-minute finish bullish. Probability wise, this should go higher. So that's one thing I'm going to play. So I'm putting the same exact trade, but this time my buy is 1617.50. SL, I think, would still be, I put it at 1612 below the wick of the candlestick. TP 1624 and let runner run based off structure. So that's basically it. That would probably be my last trade for the day too. Continue. Ooh, one more. 15-minute. Interesting.
Ooh.
Damn. Friday trades, man. Friday trades. So now this one got hit. SL got hit. And this one was break even. Hit. So my biggest lesson into this first one, I'm gonna have to say, is reduce my risk due to news. That's gonna be the biggest one. The second thing is play after news. Don't play the news, because I think playing the news is kind of risky in a sense. But if you play after the news, let's say I played here, then that would just be like one trade. Trust that analysis and kind of like let this form. Play after, reduce risk due to news. That'd be the other one. So let's just see how it goes for the rest of the day. I think when the US market opens, that's when the data will be absorbed into the market and we'll see what happens. Oh, wow, look at that.
Yeah. I mean, I totally agree on that point too. Playing the news and stuff, it's like, it's honestly, no one knows.
Oh,
And
dude,
it's
no
like,
one knows.
after the news, at least the information's been put into kind of like the models
Well,
of big institutions, and then they're going to be putting the orders in. So you have more defined one. So typically after news, I want to see the 30-minute candlestick form, and then that's like
that's
my
a lot safer. But even with that aspect, so with the news, this 30-minute form bearish, but
yeah.
tapped into the bottom range. And then when you see 7 o'clock candlestick open, it went bullish. I'm just analyzing for future
So
references.
so 6:30
Yeah, the
was the news.
6:30 was in news and it went
Yeah.
bearish right here.
Yeah.
But then the next candlestick went bullish right here. So that's
Right.
tough to even play. But this bearish candlestick tapped into the bottom of the range and then kind of pushed up higher when the market or when pre New York opened. So it's tough to play. I remember this time it was a lot of volatility, so it could easily like push you in and out of positions when the volatility was increased. I think VIX was at its highest at this point too. So even with this range, man, from here to here, that's about a 150 pip range.
Yeah, it is, and that's huge.
That's huge. That's tough to play.
Yeah.
Overall, I'm still bullish. If I had one more trade to do, I would go in on another buy just based off this 30-minute. I feel like this 30-minute, you have a stop below here and you can kind of let it run. So in let's put a hypothetical trade in. So that's one trade I would do right now. 15-minute two, kind of taps down here, goes up. Still a bullish market structure. I think 1630s get hit, and then you kind of have a runner going after. But let's see what happens. It's just a range day. Nothing. Yeah, that is the definition of a range day.
Yeah. Oh.
Does it break out? No. Oh, it did.
Yeah.
12:30.
That's wild. But I mean, it's a Friday.
It is a Friday, so
People will probably heading to the bars early.
yeah, exactly. That's pretty crazy. I feel like computers kind of just took you in and out, but this is a clean breakout here. Even if you had this breakout at this point, if we were trading,
Yeah.
that's a nice move. Other than that, I mean, it did break out of this range and continue higher, but so much volatility, computers trading, etc. I think gold was pretty wild back then. I got killed on it back then, so save this. Put this as a lesson for my simulation, and I think I'm done with that simulation now. I will hand the reins over to Chan here. Just give me 1 second. I'm gonna reset this
Take your
chart.
time. I'm making Q card notes right now, so it's all good.
Cue card notes. I'm gonna save this. All right, you can share your screen
Sure.
anytime now.
Okay. Uh,
Where'd the Zoom chat go? Oh, there it is.
all right, so we're gonna be doing April 3rd. So just a quick little view here. Let me just mute. Just go blind right now. And It was April 3rd, you said? So April
Yeah, April 3rd, Friday.
So we're gonna go to March 29th. Oh no. Yeah, 27th. March 27th. So it's here, replay. So we're gonna try to take a look at the weekly candlestick first. Okay, cool. All right. Is this March 23rd? No. 3rd, so it'd be, yeah, March 23rd candle. Okay, good. So if I look at the daily, that's the March 26th candle. Yeah, I think that looks about right. Or is it 27th, 30th? No, it's the 27th. Sorry, technical difficulties here, guys. Give me a second. March 27th, weekly. There we go. So, kind of what Simmer had mentioned and stuff. There's definitely a lot of noise here. So, weekly candlestick, we had a huge sell-off on. Oh wow, wrong chart.
Yeah, I was like, you're doing pound cat. Interesting.
Blind here. March 27th, March 30th. So let's look at the weekly for this one. Yeah, essentially the same thing you're gonna see. So as pound CAD, but all right, let's take a look at this. So huge reversal candlestick. You have two bearish candlesticks and then a bullish candlestick's body that surpasses the previous candlestick. Definitely a good sign that you'll see a continuation, maybe back up to this zone. But at any point, we are trading in a high volatile time, so anything can happen. So take that with a grain of salt here. So, oh, thunderstorms going on. So if you guys heard that, we've been getting a lot of thunderstorms in Calgary. But kind of to the point here is that right now, high traffic area, I don't think anyone in this time, especially during COVID, knows kind of what's going on.
So much volatility, man. Look at that. Euro USD went from like 115 to 107. That's insane.
Yeah, like look at the previous candlesticks and then look at this 5 week. Like that's not normal. Like one of these candlesticks is basically one weekly candlestick is, I would say, compared to their monthly candlestick in the amount of movement you're gonna see here. And Euro USD moves slow, but you see right here that's a 400 pip move, which is very unusual, let's just say. But okay, besides the point, we've kind of listed up the criteria that we're in a very high volatile kind of point in this trading. So of course, kind of touching on to Simmer's point with gold is you have to judge your risk and input that volatility in your trades. And the best way to do that, I would say, is by measuring the moves and measuring the candlesticks. And so essentially what I mean by that is that if we're trading on the 30-minute, 1 hour time frame, we look at what the previous candlesticks and how big of a movement is, and we judge it because we use these candlesticks as a kind of like a measurement, a ruler of some sorts to kind of predict what's going to happen in the future and anticipate that if this volatility carries forward, you're going to see like the same thing. So, okay, so my weekly analysis is, it made a huge reversal candlestick from the previous bearish candlestick. And I do see that we could enter back into the 1300s area for the next weekly candlestick. Now, don't forget, we're trading April 3rd's day here. So we're looking right now on March 27th, which is the previous week's weekly candlestick, to just give us a kind of an outline of what to expect, I am going to go to the daily chart. I'm going to fast forward a little bit here so we can see, but just a heads up to everyone here. So now daily, very, very beautiful market structure here. Higher highs, lower highs, higher highs. So this is kind of typically what you see it. Ideally, like this is like the trade. Like you want to see, you like to see first of all here this support area, but second of all you want to see that break the first movement up and the body holding itself, which you do see here, and then this just this candlesticks just to be expected once you do see um, a candlestick's body form above, like kind of nicely above the previous three candlesticks. Ideally speaking, too, if you're kind of looking at what I like to use is to identify a reversal happening, is you have a huge bearish candlestick here. We're on the daily chart here, bearish candlestick here, and an ideal kind of setup or breakout momentum strategy you can implement is you could have a buy stops above this level, the body of this level, and you know if you did do that, you would have seen a nice push up here. But let me just delete everything here and let's continue. All right, so the daily looks bullish, but like I said, I'm fast forwarded. We are trading April's third day, which is around here, and there is going to be news. There's going to be NFP, and people are going to be looking at NFP a lot more for the fact that we are at a time of crisis, and for that measure, that people are going to look at the economic data and have more kind of significance to this data to predict what's going to happen in the future, or factor it in, as they will say. All right, so I'm just a fast forward here. Just seconds. So this is the second, perfect. So second, now if you imagine this now on the weekly candlestick right now, I'm not going to click on the week because then we're going to see what happens on the third. But we've seen that the momentum's changed on the daily time frame. We see that first, you don't even have an upper wick on the candlestick. You actually have a gap down a little bit lower, and there is, so essentially if you're imagining the bearish candlestick, there is no upper wick. It's just a nice actually,
there was an upper wick.
There is an upper wick. Yeah, there's an upper wick, but it just, and I guess it's gone a little bit lower than the previous week, so it gapped down a bit.
Yeah.
Is this going to keep continuing? I mean, if 4 days in a row it's bearish, typically speaking, you're going to be saying that, okay, well, fifth day is probably going to be bearish, because if you look at here, what is that? Clean traffic. It's clean traffic here. It's clean traffic here.
But yeah, one lesson from the gold, it could just have a range, kind of like volatile, up and down type of day, something like that. So just gotta be nimble.
You gotta be nimble, but I mean, if you're gonna say what day am I gonna expect April 5th, I mean April 3rd to be, it's gonna be another bearish day.
Yeah.
Just judging by the last 4 days and stuff. So I mean, and they move in waves, it's clean kind of orders. I think there's really hard to say unless you're looking at this support here, it's really hard to say that there's any supports anywhere else. I mean, there is like an upper support here, mini support, but during times of high volatility and stuff, these supports are harder to come by during less volatile times, right? So at least it gives us a gauge. You have a supply area and you have a demand area here. I'm just gonna extend this maybe a little bit for everyone. So you have these two areas here now. Do I think it's a tap this zone? Yeah, I do think it's a tap this zone, and then maybe, like Simmer said, range, and then kind of go back up. But there is a supply area here. Now I'm just gonna go 4 hours and kind of just check this out. Yeah, bullish, just beautiful here. Just want to comment on this though. Just move this up a bit here, but just want to comment on just classic, just. Here's a little nice 4-hour support and resistance. You broke support. You have a little bit of a push down here. As I said, you doesn't move much, but that's still a 30 pip move. So we typically, for our intraday trading, we're going about 10 pips, give or say. Of course, it depends on the move. It depends on the volatility of the day. But you have that beautiful, beautiful retest here. a little bit of a retest here, but as you can see, it's lower wicks, higher lower wicks, and then you see you have this that a great entry point area would be kind of when it broke this level to enter kind of sell stops here. Beautiful entry point if you're waiting for that. And of course, obviously, I wouldn't be trading this because this would be 3 o'clock in the morning, but the opportunities are there. But yeah, okay, perfect. So kind of going to the hourly chart here, I'm just going to fast forward it to the 5 o'clock our time here, Mountain Time. So oof. 1, 2, 4, 5. Okay, perfect. So we're at oh wait, this is gonna be 6 o'clock then. Never mind. Oh, whatever. That's usually when I'm gonna be on the streams anyways, the 6 o'clock Mountain Time. So again, you see a breakdown. We are heading towards a supply area right now. Just a nice on the hourly, just a nice breakdown here. And honestly, like if you put sell stops, especially when you're in a downtrend, it's just like you wait for it to have this consolidation phase, and then have a sell stops kind of previous to the low of the previous day, again here and here and here. And then it broke down for a nice kind of 30 pip move again. So really nice stuff. Now what are we gonna do? It's 6 o'clock and it's the start of the day for us. You have an attempt to kind of go to the kind of the resist or the support level, turn resistance. And for me anyways here, if I saw this, I would be more looking for shorts right here. I mean, it already made a lower low right here compared to the previous candlesticks. News is at 6:30, right? So that's in 30 minutes from now.
Mm-hmm.
So yeah, as you can see, unemployment rate, non-farm payroll, NFP. So typically speaking, we kind of have the idea that COVID's not good. U.S. dollars just getting wrecked right now. U.S. dollars getting. No, euro is getting wrecked. Sorry, U.S. dollar is getting strong because people flock into a safe haven, and of course, the greenback is probably one of the safest assets for most people. I mean, biggest market is in U.S. dollars anyway. So at this point too, I want to let everyone know markets were kind of selling off as well, right? And that market's going to be sold off and held into whatever other typically would be sold off and be in the U.S. denominated dollar.
Yeah.
Okay, perfect. So I'm just going to go 30 minutes. Yeah, 30 minutes. It's essentially a 30-minute doji. You have already the previous breakout. I think I'm bearish on this candlestick. I'm going with the trend here. Trend is our friend. I'm not going to try to play reversal yet. What I think I'm going to do is I'm going to put a sell stop here at like just below the wick. And I'm just going to go with the momentum. I'm going to go full position here, 10 pips either way. So 10 pips would be here, and then 10 pips would be down there. So just above the zone that we've created for ourselves. Okay. Just as a final confirmation for the push here. So let me just.
You gonna have a runner?
Yeah, I'm gonna have a runner. So to that point, we always try to have runners because we don't know how far things can move our way. Worst thing is runners get break even if they hit your if they hit your TP, you break even automatically, and then that's a free trade. If it goes another 10 more pips, that's 2-to-1 ratio now instead of a 1-for-1 RR. It's bonus money, right? And then maybe sell half if you're confident that's going to go up more, and then you break even at. And we like to use the 30-minute candlestick as kind of like where we put our take, or at that point will be our take profits, not our stop losses anymore, but kind of right above there. So we, no matter what, this trade is going to be green. but we're gonna still lock in a little bit of the profits even for a runner. Okay, because any profits or any money added into your account is always a good thing, especially once it's your main positions out, which is what carries the most risk for your whole setup here. So entry would be sell stops here at 17834, and I'm gonna go 10 pips for 10 pips. So stop loss here is gonna be 107.934, and then TP is going to be and TP is going to be for 80% of the position. And honestly, right now it doesn't really matter about what you can have. A dollar position, you have $100 lot or 100 lot. It doesn't really matter. The same trade's going to be the same thing regardless of a 10-cent lot and a $10 lot, or a lot size. Sorry, not $10 lot.
$10.
A lot is $10. Sorry. So 80% TP would be 10 pips away, and then that would automatically, like I mentioned before, if this TP gets triggered, we're gonna have a stop loss at break even. Okay. Just
834.
Yeah.
Okay. Well, that's 20 pips.
Oh shit. No, that's 10 pips. Entries at 834.
Oh yeah, I was reading that cell. My bad. Yeah, 834.
Yeah. So okay, so then 15 minutes. Let's take a quick look. I really like using the 30 minutes more, and like the 30 minutes for me is like a doji here, so it doesn't really mean anything. And the price still formed below this level here, the first support, the first touchdown point, I'm just gonna call it, right? And then we have a lower kind of point. So it did try to make an attempt here to go higher, but obviously there's a lot of selling pressure right now. So my bet is short. And let me just go 5 minutes here. So same thing, we're gonna go play this, and then like I said though, we have to be careful. We honestly, this is going to be a trade, but hopefully the volatility in some sense pushes the price down. We're only going for 10 pips. This is a pre-news trade. I don't really want to trade post like the news event. Probably going to end up, if I'm going to do another trade, probably around 7 o'clock, 7:30, just for the news to be digested, and then kind of see what's going to happen then. Okay, so we're at that 5 minutes. Let's just fast forward a little bit here. Forward. Oh wow, I get hit.
No,
I did not get hit. Okay, cool. Forward. Okay, did I get hit? Yes.
Nope. Almost.
Oh man, 3, 4. Oh man. Okay, so I'm still in this. 6:10. Let's just look at the 15-minute real quick. I mean, 15-minute kind of looks good. It's kind of broken down the.
But now, structure. Like, if it breaks, then it's pretty good confirmation.
It's a pretty good confirmation for that 10 pips. We still have 15 minutes before the news event. Honestly, kind of sketchy at this point. I'd probably maybe go half position on this for the news, just because we're kind of cutting it close. But it is what it is. I just kind of want to show you everyone here kind of the strategies and what we're trying to go with, the logic.
Just a quick point. If there was no news and if this was just like a regular chart on a regular day, that's a trade we go in all the time.
Yeah, full position, stuff like that, right? Because like typically we have this the risk per share. Yeah. So then we usually go 50-50 because we always expect a wick up. But I mean, we're playing a momentum here, because if it breaks down, I'm expecting another 30 pip drop, typically speaking, right? Just like what it's happened kind of in the previous last 3 times when you break a level. But yeah, there's certain setups that we do the 50-50, and then if it's momentum, you just go all in, and then you just get your core position out, and then you let it run around. Yeah, and then it's carefree, stress-free type of trading that our mentor Roger, Wicks Don't Lie, always says and always preaches about. Okay, and I agree. Why choose stress when you don't have to be stressed? Okay, perfect. So I'm still not hit in this position yet. Hopefully the next candlestick brings me and takes me out. or takes my TP out.
Takes me out.
Takes me out. Okay, so I'm just gonna fast forward it to the 5 minutes here. Kind of see what's going to go happen. Yes, it hits. See, and this is the news thing. It's unexpected. It hits, and am I stuffed out?
Yeah. I think so. Yeah.
Yeah. So see, like this, news is definitely a hard pill to swallow. I mean, I guess a big learning from this is that, maybe just wait after the news, right?
That's exactly what happened to me, man. Just wait
What's
after.
the point of trying to play the news, right? And then, okay, you're gonna fast forward. I'm already stuffed out of this trade. So this 6:30 candlestick, you had the breakdown, and it's a little bit high.
But now you could look for buys, to be honest. If it formed a double bottom, and let's say it does start breaking out, potential. I'm just saying.
Yeah, no, I totally agree. I mean, for me, anyways, I want to at least give the market half an hour, kind of like after the news comes out, to digest the information and then kind of go which direction it wants to. So I'm gonna wait here. I'm just gonna fast forward it with the 15-minute candlestick just because.
Ooh, wow.
So you have another reversal here.
The news, man, it's too crazy.
News is too crazy, right? Because you have it's like this, for example. If you have 10 big banks or something, or 10 Forex exchange organizations, right? And don't forget, the Feds are part of this Euro USD trade. They do tap into I mean, not maybe this per se trade, but I'm just saying governments do interfere with currency because it's almost like a national security, right? Of imports and exports, and it's like the vital line of imports and exports. So it is a matter of interest for the state as well. But of course, that's if things get too crazy. I'm not saying this was it, but all right. So you have 10 big banks. Let's just say, for example, interstate banks or whatever you want to say, right? And essentially, they all have different models, almost the same, but kind of 10 different models, and they input data into those models. Honestly, each model could be 50-50 and split a long or a short decision, right? To sell Euro USDs or to sell US dollars and then transfer to euros or the other side of the trade. So that's why I like to let news kind of develop in itself, because you never know what's going to happen, what their system's going to spit out. It's a magical number that no one knows, but if you think about it, it's also going to be, they're just an average. So they themselves going to make kind of the smart money, but smart money, even the big banks do make money or lose money all the time too. It's not like their systems are perfect, but they use that money or they use their hedges for kind of business operations. So their standpoint, their perspective is they're probably not trying to make money from currency trading in itself, but their assets are so heavily maybe invested in the euro market or the US market that if they don't hedge themselves, they will come out with a loss on an FX conversion. And if they're an international bank, let's just say, for example, JP Morgan, right? TD, you have exposure to different currencies, you do have to hedge. This is an operation in itself to make your financial statements look good. So that's another key aspect, right? But I don't know, I kind of went off on a tangent here off of this trade, but main thing is kind of just wait. I'm going to just click on here, next candlestick here. So we're at the 7 o'clock now. And yeah. So one thing is now I'm going to do this. So I lost on the first trade. Now the second trade, it's kind of playing out to what I want it to play out to be, and it's showing for me anyways, 30 minutes, the move down. I do believe that it's going to tap this area here. I'm just trying to go for 10 pips here. I think I'm going to go for another trade here as well. So, but we've had this set up. The news is for me kind of over now.
Look at the hour. Yeah, that does look good. And
then one thing I point out, liquidity grab.
Yeah.
Liquidity grab makes a new higher high on the 1 hour chart, but then forms with a lower low body. And now you have 3 hours of bearish momentum. I think the fourth one might be bearish. Just an estimate here. So I'm gonna just close this for a second here. I'm gonna bring you guys to my risk per share kind of spreadsheet here. So let's just say, okay, we're feeling confident. We see the liquidity grab on the hour. I feel like I want to take more risk on this. Manage risk, of course, right? I'm gonna risk $70 per trade here. Okay. So let's go back to the charts here. Let's look at the 30-minute chart here. So, okay, we can identify that this is a support. So typically, if this is a move, you might see a move up higher here to the support area and then test go back lower. So where I'm going to do is I'm going to enter right here for half position. I think I'm going to enter another half position here. From here to the support level, or the resistance level, I should say. Yeah, so let's just say here. I think I'm going to risk for this trade here about 15 pips is kind of what my risk margin is going to be. Okay, so I'm going to go back to the spreadsheet here. So 15 pips, I go over here. Okay, so half position. I'm going to risk half of this amount listed here. So let's just go, let's go 2.3, give or take, or 2.4, 0.24, sorry. And then my stop loss is going to be 91. So my punch in is going to be 769. And pips was 15 initially. Now, where is my buy limit going to be? So my buy limit is probably going to be around this area. So I'm going to use this wick as kind of like if I expect the continuation of the move down there, it's going to go like the wick, upper wick is going to go to the previous's wick as kind of like a mini support resistance, because I know orders are there. Okay, so just a little bit below. So I'm going to say, not talking that much. Yeah, let's just go. Let's go 70, 80 area here. So 780. That's 3 pips less, so that's 12 pip risk here. So I'm gonna go enter the other half position here. So divide that by 2, so 0.29 here is gonna be my other position here. So in this whole trade that you see right now, I'm still risking $70. We're 0.53 units here. And the risk is, let's just say average price, and then the risk here is going to be somewhat matching up to around this amount right here, which kind of coincides. I think that's what you mentioned earlier, Simmer.
Yeah, on a previous stream.
Yeah. All right, so I have the information here. I'm gonna put this onto the spreadsheet. I mean, not the spreadsheet, trading view. Okay, perfect. So the trade's planned out, the risk management, everything's kind of on the spreadsheet. We know where we're going to enter, how much we're going to enter, how much we're going to risk, and where our TP is going to be at. TP is going to be at 66 here, so it's still above the channel for a full position. For a half position, it's still on the upper range of the channel here. So I'm going to go ahead, fast forward it with the 5 minute, and kind of see how this plays out. So remember, we've entered, where is that? Pull this down. We've entered. I'm gonna enter after this hour had closed, so we're at 7 o'clock. Let's just say the price I got was punch in 7769, and then we'll see from kind of what's gonna happen now. Okay, perfect. So forward, yep, upper wick. So now I'm full position in on this trade. So my average price now is gonna be 778. And then my stop loss is still going to be the same. It's going to be at where's stop loss at? Here, 791. And we're going to anticipate that it's going to go down more. We'll see if the Forex gods are going to allow that to happen. So, okay, we have forwarded a bit. We're still below my price here. It's making it up and it's touching the resistance area. Now, is it going to continue and break up here? Now, one thing I also should mention, it's Friday. It's very choppy. This news has more weighting to it than your previous NFPs and stuff like that. When the good times are good, no one really cares about NFP. The changes are very marginal, but we're in a time of hectic. Maybe I should go and kind of show the viewers that. So as you can see here, this is insane. You have here
crazy.
700 minus 700,000 jobs when your typical forecast is 100,000, which is huge. And what the previous one was, you had a good change, a positive change to such a dramatic change. You're talking a sway of more than 1 million right here. A sway from this positive number to down here, which is insane. Unemployment rate jumped up also, which is also a huge factor as well. So yeah, doesn't look good. We know that. And now we're going to go back to the charts here. And let's see. It's a play out, or am I going to get stopped out? So, did I get stopped out? No, I'm still in it. Barely. But still in it at 90. Where is it? 91? Yeah, I'm still in the trade. My stop loss is at 91. It was really close there. Ideally speaking, maybe I should have put it maybe 2 or 3 pips higher than this amount, but it tapped in there. Let's just see if it's going to push up higher. If it pushes up higher, that means I've had 2 losing trades. I'm going to be done for today, and just kind of watch the markets and wait for new opportunities to present itself on the next week coming. And okay, I'm out.
Fridays, man.
Fridays are crazy. News is crazy. That's all I have to say really about
Too insane, man. It's tough to trade on Fridays and especially news days. It's like,
yeah, news days is insane. Now let's just fast forward it. Oh wait, let me go back here. Let's go 15 minutes. That's insane. Yeah, breaks up, goes lower, breaks up, found support here. And honestly, with this consolidation up, I could see this kind of moving up here. But you know, I already utilized all, like, I've had 2 straight losers and stuff. One winner really isn't going to change the day. It might make the day even crappier. It might just make me break even. But honestly, then you're just trying to chase the dragon in a sense. And yeah, I'm just gonna play this. Kind of see how the markets are gonna, and of course it's just consolidating until around the same time, Simmer, as your gold move up.
Oh wow, yeah.
Like around 12:30 o'clock. But yeah, I mean, really, this whole thing, if I kept trading, I would have just lost money. Now we've entered a range, and like what we said in our previous videos, ranges go shit.
Yeah, straight go shit.
So it's just like, it doesn't matter. Took the 2 losers and stuff. I thought it was going to break down more. It did not break down more. Ideally, if I saved my last trade for a better setup at like 11:30, like when you see kind of like a build up of like, let's just go to 30-minute. And kind of like a build up here, like one green one, another green one. It forms kind of at this. I mean, the best trade probably would have been if you put a buy stop above this area. Wow, the arrow just had
it. Yeah, I think the buy stop above there, that was nice because it just had like a clean bullish breakout.
Quick 10 pips, because if that broke that area, buy stops, it's going to probably break it up. Your next level was going to be here anyways, because you're in the middle of the range, but you see a breakout out of the middle of the range too, right? And yeah, that would have been the trade. The other shit was kind of like crap. So hopefully you learned some lessons today from Euro USD, and about, I think news is a very hard thing to fathom, like to trade on, unless you are running the models too and you have a good model in place. It's hard.
Oh, news is tough. It's really tough to play. But I mean, we learn. So.
Yeah, live and learn. But yeah, exactly. So that's kind of my wrap up for your USD today.
All right. Well, I think the simulation gave us some good lessons, as in news tough, Friday tough. I mean, we knew that. But like regular days, if it was a regular chart, those are the same trades we would take. There was a volatility aspect. There's also the Friday aspect, like Euro USD had 4 straight days down. The momentum kind of slowed. The news came into play. There was just a lot of factors going into
Yeah.
it. Gold, news, choppy, volatility, everything. So those are the types of things we gotta take in consideration next time there's like volatility build up. Gotta be like safer, plan out trades more, taking into consideration the wicks up and down. But that's why we do simulations, right? There's simulations because they're
Better.
good lessons to get better.
But yeah, and kind of to Simmer's point too, and since I'm sharing my screen, like this would have been Thursday, worked out fine. Thursday, yeah, when it broke, worked out fine. Wednesday, when it broke, worked out fine. Tuesday, broke, worked out fine. So I'm just saying the opportunities always present itself, right? Friday news and stuff is honestly, I would say, just a recipe for disaster. So, I mean, see, this is why we would have entered the trades regardless, right? If it's the same setup as Simmer says, same trade, like same setup, no new stuff like that, it's a trade that we'll always take 100% of the time.
Yeah, for sure.
Awesome.
All right, well, I think we're gonna wrap it up. That was a pretty good stream session today. We have our simulations, we have our analysis. So if you did watch these videos, please leave a like on the stream, follow, subscribe, do all that. During the week, we're gonna get our website up, start putting the website on it. I was looking at GoDaddy while you're doing the simulation. I think I'm gonna get the domain, so we'll get our domain up, start building on the website, put content on there, link our YouTube, link our trades, link our analysis, our timestamps on the videos because the
Yeah.
videos are 3 hours long. Shout out to Cecilia for doing that,
Yeah.
telling us that. Shout out to the girl for Chan's girl for that, and it was really good. We're gonna have the timestamp there, have the blog, have our trade. So instead of watching the full 3 hour video, whoever tunes in, they can just watch the timestamp.
Yeah, and kind of on Simmer's point there, and with kind of the reason for this website, we want to kind of have a bit of everything for people that are beginners to people with more intermediate or people that want to be part of a community of just giving information, becoming better traders. But we also know the time constraints as well because the videos are somewhat longer than what most people have. 3 hours is essentially a movie every single day. So we want to kind of make things a little bit more concise for the people that are busy with work right now as well, or are just interested in trading but aren't going to be trading. We want to have that holistic approach, and this is kind of where we're going to build that platform. Is going to be on this website. So it's going to be very interesting. There's going to be a lot of new information. It'll be our phase one plan here to kind of put everything together. There's still, of course, more to come, but we'll kind of release as it comes closer to those dates. But yeah, we'll release more news about what's going to go on with the website. We'll attach the link on the bio of this video. So come check it out. And yes, it's going to be a few months of busy building up the website, but we're looking forward to this challenge. It's be super fun.
Yeah, just want to put up content, free knowledge, and basically grow slowly but surely. So it'll be good. But yeah, thank you everybody tuning in. See you tomorrow morning. Quick note: tomorrow morning, I might be up at 6 because fireworks tonight. But thanks for tuning in.
No, I feel you. Yeah. So streams probably start 6:30. We'll manually, but yeah.
All right.
Perfect.